Hello, everyone. Welcome to the market opening bell on Thursday, July 24th, your 10-minute guide to the stock market. Sweden has confirmed that the third round of US China trade talks will take place next week, and US President Trump has indicated he may visit China soon to address trade and other issues between the two nations. Hong Kong stocks rose for the fourth consecutive trading day, with the Hang Seng Index opening 218 points higher and maintaining its upward momentum, closing at the day's high of 25,538 points, up 408 points or 1.6%, marking a more than 3-year high. The A-share index gained 165 points or 1.8%, closing at 9,241 points, while the Hang Seng Tech Index rose 138 points or 2.5%, closing at 5,745 points. Total turnover in Hong Kong stocks was 333 billion Hong Kong dollars. Southbound funds recorded a net sell-off of 1.32 billion Hong Kong dollars in Hong Kong stocks, including net purchase China Life Insurance totaling 665 million, SMIC 486 million, China Energy Engineering 256 million, Alibaba 202 million, PopMart 173 million, Dongfang Electric 170 million. Net sales Tencent Holdings 1.129 billion, Meituan 1.021 billion, Xiaomi 983 million. Statistics show that southbound funds have net bought SMIC for 5 consecutive days, totaling 1.662 billion, and China Life Insurance for 2 consecutive days, totaling 1.543 billion. Technically, the Hang Seng Index has reached its target of 25,400 points, with the next targets at 25,700 and 26,000 points. However, yesterday the index formed a 98-point rising gap between 25,130 and 25,228 points. Investors should watch whether this gap is filled in the short term before the index continues to rise. Mainland China markets surged but later retreated. The Shanghai Composite Index peaked at 3,613 points but closed at 3,582 points, up 1 point. The Shenzhen Component Index closed at 11,059 points, down 40 points or 0.4%. Combined turnover in Shanghai and Shenzhen was 1.865 trillion yuan, down 28.4 billion yuan from the previous day. The renminbi central parity rate was set at 7.1414 to $1, up 46 pips from the previous day, reaching its highest level in over 8.5 months. Baidu, which had been underperforming, saw its stock price surge 6%, closing at $93.3. Since Radish announced its partnership with Uber, ARK Invest, led by Cathie Wood, known as the tech stock goddess, has increased its Baidu holdings for 4 consecutive trading days. Since establishing its position in March this year, Cathie Wood has steadily added to the stake, with current holdings more than 2.3 times the initial purchase amount. Previously, Cathie Wood repeatedly praised Radish, stating in interviews that only Baidu, Waymo, and Tesla are capable of achieving true robo-taxi services globally. Analysts estimate Radish valuation to be around 40 billion US dollars. The partnership between Radish and Uber plans to integrate thousands of Radish sixth-generation autonomous vehicles into Uber's global ride-hailing network, with deployment starting in Asia and the Middle East by the end of 2025 and further expansion planned. Passengers will be able to book Radish driverless cars via the Uber app, marking a significant step toward scaling autonomous ride-hailing services. Radish has deployed over 1,000 autonomous vehicles across 15 cities, including Dubai, Abu Dhabi, and Hong Kong, with a safety record of over 1.7 billion kilometers and 11 million rides provided by May 2025. Its sixth-generation vehicles, priced at approximately 28,000 US dollars, use a multi-sensor fusion approach, including LiDAR cameras and radars, and Baidu's Apollo ADF-M large-scale model, ensuring high safety and reliability in complex urban environments. For Radish Run, Uber's global network accelerates its international expansion without the need to build local infrastructure from scratch. For Uber, the partnership addresses future driver shortages and reduces operational costs by leveraging Radish Run's proven L4 autonomous driving technology, creating a win-win situation. Another piece of news regarding Baidu is that its commercial R&D team's self-developed AIGC video generation model, MuSteamer, has officially launched on the mobile web version, allowing users to generate cinematic quality videos with one click on mobile devices. Since its launch 2 weeks ago, the model has attracted over 300,000 registered users, with 18,000 tasks submitted per hour and over 2 million pieces of content generated. Currently, the turbo version is in a limited time free public beta, with Lite, Pro, and Full Series audio versions set to launch in August, marking the industry's first support for single-person voice and two-person dialogue via video generation. Reports indicate that the US and the EU are nearing a 15% tariff agreement, boosting US stocks. The Dow Jones Industrial Average rose 507 points or 1.1% for the day, closing at 45,016 points, near its historical high. The Nasdaq closed above 21,000 points for the first time, up 127 points or 0.6% at 21,020 points. The S&P 500 gained 49 points or 0.8%, closing at 6,358 points, marking its 12th record high this year. The Nasdaq Golden Dragon China Index, reflecting Chinese concept stocks, rose 58 points or 0.8% at close, reaching 7,896 points. Major tech stocks showed mixed performance. Nvidia closed over 2% higher. Meta rose 1%, while Apple dipped slightly by 0.1%. Tesla edged up 0.1%. After the market closed, the company reported a 16% year-on-year drop in Q2 net profit to 1.17 billion US dollars, with adjusted earnings per share of 40 cents, below the market's expected 43 cents. Total revenue fell 12% to approximately $22.5 billion, missing the forecast of $22.74 billion. Deliveries dropped 13% to 384,000 vehicles, with automotive revenue at $16.66 billion, down 16% year-on-year, but up 19% quarter-on-quarter. Tesla stated that despite macroeconomic uncertainties due to tariff changes, many key projects, including its autonomous taxi and affordable vehicle plans, remain on track, with mass production of the affordable model expected in the second half of this year. The stock fell 0.8% after hours. Alphabet dipped 0.3% after the close. The company reported a 19% year-on-year increase in Q2 net profit to 28.196 billion US dollars, with earnings per share of $2.31, surpassing the market's expected $2.18. Revenue grew 14% to $96.43 billion, also beating the forecast of $94 billion. However, the company projected 2025 capital expenditure of $85 billion, exceeding the prior estimate of $75 billion, leading to a stock drop of over 1% after hours. IBM reported a roughly 20% year-on-year increase in Q2 net profit to 2.19 billion US dollars, with adjusted earnings per share of $2.8, above the market's expected $2.64. Revenue rose 8% to $16.98 billion, also exceeding expectations. However, the stock fell over 5% after hours. Our stock pick today is ASMPT, stock code 522. ASMPT announced its second quarter results for 2025. Sales revenue reached 3.4 billion Hong Kong dollars or $436 million US, up 1.8% year-on-year and 8.9% quarter-on-quarter. New order bookings totaled 3.75 billion Hong Kong dollars, exceeding expectations with a significant 20.2% year-on-year increase and 11.9% quarter-on-quarter growth. Operating profit was 169 million Hong Kong dollars, up 25.4% year-on-year and 5.9% quarter-on-quarter. Net profit was 134 million dollars, down 1.7% year-on-year, but up 62.6% quarter-on-quarter. Basic earnings per share were 32 Hong Kong cents, down 3% year-on-year, but up 60% quarter-on-quarter. In the first half of 2025, driven by the strong artificial intelligence wave, the group's advanced packaging business continued to grow, contributing significantly to total sales revenue, accounting for approximately 39% of total sales, primarily driven by sustained demand for thermal compression bonding (TCB) tools. The group secured follow-on orders for TCB tools in memory and logic applications, maintaining the largest installed base of TCB tools globally, exceeding 500 units. Additionally, new order bookings for power management solutions reflected growing demand from mainstream businesses in AI data centers, while orders from China saw significant growth, fueled by electric vehicles and consumer end markets. Regarding next-generation tools, the group expects hybrid bonding (HB) to coexist with other packaging technologies, with adoption progressing gradually. Progress continued with first and second-generation HB tools, with customers actively engaged in setup, certification, and delivery stages. Notably, second-generation HB tools offer competitive advantages in alignment and bonding accuracy, footprint, and output per hour. The group expects to deliver these second-generation tools to a high bandwidth memory (HBM) customer in Q3 2025. The rapid growth of AI continues to drive data center bandwidth demand, boosting the need for optical transceivers and co-packaged optics (CPO) applications. The group's photonics tools enable the packaging of higher bandwidth transceivers, particularly 800 gig and above. Due to its significant market leadership, the group expects sustained order momentum from global transceiver manufacturers serving major AI companies. Although the CPO market is still in its early stages, the group has actively collaborated with leading global CPO companies and secured a significant order from a leading integrated equipment manufacturer in the first half of 2025, positioning it favorably to increase market share. The group forecasts Q3 2025 sales revenue to range between 445 million and 505 million US, with the midpoint indicating a 10.8% year-on-year increase and 8.9% quarter-on-quarter growth, surpassing market expectations. The group reiterated its projection that the total addressable market for TCB will reach $1 billion by 2027 and will continue to focus on strengthening its leadership in the TCB market for memory and logic applications. Recommended buy price 62 Hong Kong dollars, target price $69, stop loss $59. I do not hold the aforementioned stock.